Hello, and welcome back to Explain the Charts, your go-to channel for in-depth technical and news analysis. Today, on October 7th, 2025, we're taking a close look at Intel Corporation, ticker Intel. The company has been making major headlines, with its stock price surging an incredible 88% over the past 6 months, prompting many to ask if this is a sustainable turnaround. Let's first dive into the news driving this phenomenal performance. Fundamentally, there's a lot of bullish sentiment fueled by Intel's strategic pivot towards artificial intelligence. The company projects it will ship over 100 million AI-enabled PCs by the end of 2025, with key products like the Panther Lake chip slated for launch this month. This positions them to compete more fiercely with rivals like NVIDIA and AMD. Furthermore, Intel has secured massive capital infusions, including a $2 billion investment from SoftBank and a landmark $8.9 billion from the Trump administration under the CHIPS Act. These investments, made at share prices between $20 and $23, are aimed at boosting U.S.-based manufacturing and R&D, underscoring strong institutional and governmental confidence. Another significant move was the sale of a majority stake in its Altera division to Silver Lake for $3.3 billion, which allowed Intel to cut its full-year expense forecast and focus on financial discipline. However, it's not all smooth sailing. Intel is still facing significant headwinds, including intense competition, pressure on profit margins, and the ongoing challenge of U.S. export restrictions to China. Their Q2 2025 earnings report showed flat revenue and a net loss, reminding investors that the turnaround is still a work in progress. With this mixed bag of powerful bullish catalysts and persistent bearish risks, let's turn to the charts to see how this story is unfolding in the price action. Looking at the daily chart for Intel, the long-term picture is dramatic. After a prolonged downtrend for much of the past 2 years, we can see the stock carved out a significant bottom in early April 2025, hitting a 52-week low of just $17.66. That level marked a major reversal point, kicking off the powerful uptrend we've been seeing. Notice this massive gap down in early August 2024, when the stock plunged from around $29 to below $22 in a single day. This directly corresponds with those disappointing Q2 earnings we mentioned, where the company reported a loss. Now, this is where it gets really interesting when we correlate news to price action. If we narrow our focus on the daily chart from mid-August through September of this year, we can see the stock consolidating in the low to mid $20s. Then, on September 18th, we see one of the most explosive moves on this chart. The stock gapped up from a close around $25 to open above $31. This colossal gap was a direct reaction to the positive news surrounding the Altera stake sale and the company's improved cost-cutting outlook. This is a textbook example of how a major fundamental catalyst can completely change the technical landscape, creating a new floor of support for the stock. Zooming back out to the full daily chart, that gap up propelled the stock into its current trading range. Following that move, the price has continued its ascent, recently tagging a 52-week high of $38.68 just yesterday. This $38.68 level is now the most critical resistance level to watch. A decisive break and hold above this price would signal a continuation of the uptrend and open the door for a move towards the psychological $40 mark and beyond. On the downside, we have several layers of support. The first minor support sits around the $36.35 low from the past couple of days. A more significant support zone lies around the $34 level, where the stock consolidated before this most recent leg up. The ultimate support, however, is the top of that massive news-driven gap, right around the $30 to $31 area. Now, let's switch to the 1-hour chart to analyze the short-term price action. Here we can see the aggressive rally through late September that led to the peak at $38.68. Since hitting that high, the price has pulled back and is now consolidating in a tightening range. This indicates a period of indecision, a battle between buyers trying to push through resistance and sellers taking profits near the yearly high. The volume has been decreasing during this consolidation, which is typical before a significant move. Traders will be watching for a breakout from this pattern. A break to the upside would reinforce the bullish trend, while a break below the recent lows around $36.35 could signal a deeper short-term correction. Finally, a quick look at the 15-minute chart shows today's intraday action clearly. We saw an attempted rally in the morning that was sold off, establishing that $38 level as strong intraday resistance. The price then found support at the $36.35 low before bouncing back into the current range around $36.90. This choppy, sideways action confirms the consolidation pattern we saw on the hourly chart. The short-term trend is neutral until either the daily high or low is broken with conviction. So, let's recap the key takeaways and potential scenarios for Intel. Your critical resistance level is the 52-week high at $38.68. Key support levels are found at $36.35 for the very short term, a more significant zone around $34, and the major floor at the top of the gap between $30 and $31. For a bullish outlook, we need to see a breakout and close above $38.68, preferably on high volume. Given the strong momentum and positive AI narrative, I'd place the likelihood of this happening in the short to medium term at about 60%, especially if the upcoming Panther Lake launch is well received. For a bearish outlook, a firm rejection from this resistance level could send the price back to test the $34 support. The likelihood of this scenario is about 40% and would be reinforced by any negative market sentiment or news highlighting competitive pressures from AMD or Nvidia. A break below $34 would be a significant warning sign for bulls. Keep a close eye on upcoming earnings reports, news about their new chip launches, and any shifts in geopolitical trade policies with China. These will be the primary catalysts driving the next major move. And finally, a brief disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. Trading and investing involve risk, and you should always conduct your own thorough research before making any investment decisions.